Hello, everybody. Welcome to Accounts Receivable Part 9. This is my comprehensive example for a multiple year accounts receivable problem. So let's go ahead and go to our Google Sheets. So this question is going to be a little bit different than the one we just went through. And the reason why this is different is we're going to be looking at things over a period of 2 years. For this type of question, I generally don't ask my students to prepare journal entries. Rather, what I'm going to have them do is I'm going to ask them generally for 3 things. What is the AR balance as of 12/31/25? What is the allowance for doubtful account balance as of 12/31/25? And then what was the amount of the bad debt expense for the year ended 12/31/25? So this is how I kind of go through and ask out these various questions. And I'm sorry for this. All right, let's go ahead and get to it. So during 2025, Oilers started business and had the following transactions during 2025. The first thing is they had 800,000 of credit sales. Just as a kind of a brief reminder, when we're going through and we're recording transactions, right? I've got my assets are equal to my liabilities plus my owner's equity. And I'm going to have debit credit, and I'm going to have expenses and revenues. So over here, I recorded 800,000 of credit sales. What does that mean? It means I debited accounts receivable for 800,000 and I credited sales revenue for 800,000. Remember, I credit sales with a credit revenues, or excuse me, I record revenue or sales with a credit. Okay, so right over here, this is transaction A. I'm not going to do this in a journal entry. Rather, I'm just going to use T accounts, and you'll see why pretty quickly. Letter B, I collected 375,000 of the credit sales. So when I collect the money, what's happening, right? I'm debiting cash because my cash is going up. This over here is letter B. And then I'm going to be crediting accounts receivable for 375,000, right? So this is how I'm going through and showing the cash coming through. Again, when I get paid on a receivable, I'm going to debit cash and I'm going to credit accounts receivable because my clients no longer owe me this amount of money. Now for letter C, I wrote off a receivable from Jayhawks. So right over here, how do I write off a receivable? Well, as we kind of saw before, I'm going to debit ADA and I'm going to credit accounts receivable. That's how I write off. So what I'm going to do over here is I'm going to say 20,000 for accounts receivable, and then I'm going to debit the allowance for doubtful accounts for 20,000. Just a thing that's really important to know, right, is this is our first year of operations. So our beginning balance in our allowance for doubtful accounts is going to be 0. Remember, allowance for doubtful accounts, it is a contra asset account. So over here, that's how we go through and record it. So I wrote off a $20,000 receivable, and I'm estimating that 25% of my AR would not be collected. So what I now need to go through and do is I now need to say, okay, what's my total amount of my accounts receivable? Well, I have 800,000 in credit sales. I collected 375, but I wrote off a $20,000 receivable. So my ending balance in accounts receivable is going to be 405,000. So over here, it tells me that 25% of this amount would not be collected. So I'm going to go over here and say, okay, 405,000 times 25%. So this is going to be my allowance for doubtful accounts. So my AR balance as of 12/31/25 is going to be 405,000, and my allowance for doubtful accounts balance will be a credit of 101,250. I'm just going to go ahead and add this in over here because the other thing I like my students to do is to indicate if this is going to be, this is a debit, this is going to be a credit. Okay. Now to record bad debt expense, this is always the last step. So over here, and the amount that goes into for bad debt expense is whatever I need to do to balance my allowance for doubtful accounts. So 0 plus X minus 20,000 equals 101,250. If I isolate X, I'm going to get X equals 121,250. And how do I know that this is correct? 121,250 minus 20,000 is 101,250. So I'm going to credit the allowance for doubtful accounts. I'm going to go ahead and debit bad debt expense over here for 121,250. And that would be my balancing entry. So over here, my bad debt expense is going to be 121,250 as a debit. Remember, we record expenses with a debit. So that's for 2025. Now, the reason why I like writing this kind of problem, I'm kind of messed up, but the reason why I like doing it is what happens to these different accounts. Bad debt expense and sales, these are both on the income statement. So they are going to be closed out to retained earnings. Over here, for my accounts receivable, my ending balance as of December 31st, 2025, right? This ending balance here is going to become my beginning balance the following year. So this one, 1/1/26, my ending balance becomes my beginning balance for the following period. Okay, let's see if I can get that right. I see 405 and I'm thinking freeways. Okay, right over here. So this ending balance becomes my beginning balance for the following period. Over here on the allowance for doubtful accounts, this is the same deal. 12/31/25. My ending balance becomes my beginning balance for the following period. Okay, so this 101,250 is going to be carrying forward to the next period of time. Okay, so we've got our new beginning balances. Let's go through and see what happened during 2026. So I had $1 million of credit sales. How do we do credit sales? Well, I'm going to credit sales. And then I'm going to debit accounts receivable for that same dollar amount. Okay, this is A1. Okay, so I had $1 million of credit sales. Now I collected 550,000 of the 2026 credit sales, and I collected 200,000 of the 2025 credit sales. So we'll just add ourselves a little bit more room here. So when I collect the AR, this is going to be 550,000. This is going to be 200,000. So I'm going to go ahead and credit accounts receivable. And then I'm going to be debiting cash. Now, you don't have to go through and debit cash. You can just leave that alone. It's entirely up to you, right, in terms of how you want to go through and handle this. But right over here. Okay. So, all right. So I've dealt with B1 and C1. Now, over here, I wrote off a $40,000 receivable from Commodores. When I write off a receivable, what do? I'm going to debit the allowance for doubtful accounts for the amount. This is going to be for D1. And then I'm going to credit accounts receivable. Whenever I'm writing off an allowance, whenever I am writing off an account receivable, the way that I go through and do it is always going to be the same. So wrote off the account receivable from Commodores. Okay, now I collected 35% of the JI receivable that I had written off in the prior year. Let's take a look at this. So my AR from Jayhawks was $20,000. Okay, I'm collecting 35%. So I'm getting cash of 35% of that amount. So 20,000 times 35% is going to be $7,000. Basically, I collected 35% of the receivable that I wrote off in the prior period. So now what I need to do is to do the entry. When I collect a receivable that I previously had written off, I got to do two things. First thing is I got to reinstate the receivable or reverse the curse. I'm going to debit AR, credit the allowance for doubtful accounts for $7,000. Okay. Then I'm going to go through and collect it. So I'm going to debit cash, credit accounts receivable. So over here for letter E1, so I'm going to collect, I'm going to basically reinstate the receivable. I'm going to debit accounts receivable for $7,000. Over here, I'm going to credit the allowance for doubtful accounts for $7,000. Now I'm going to show the cash being collected. So over here, I'm going to go E1, I'm going to debit cash for $7,000, and then I'm going to credit accounts receivable for $7,000. I will tell you right now, I see students make this mistake all of the time. Make sure you go through and do it on both sides, right? When you're going through and doing this, very important to do. Okay, now we're being told that we're estimating that 35% of our ending accounts receivable would not be collected. So now what we're ready to do is to go through and let's add things up. So the first thing I need to do is to figure out how much AR do I have as of the end of the year. Okay, so I've got $1,412,000, which was the 405 beginning balance. I had credit sales of $1 million, and then I reinstated an AR that I had previously written off. Over here, I've got collections of $550,200. I wrote off a receivable for $40,000 this year, and then I collected that receivable that I had reinstated. So my ending balance in accounts receivable is going to be $615,000. So this is my ending accounts receivable balance as of 12/31/16, and this is going to be a debit balance. Now, when I go through my next step, right, is going to be to determine what is the ending balance in the allowance for doubtful accounts. This is going to be 615 times 35%, where this is going to be 215,250. So when I take 615,000 times 35%, I'm going to get 215,250. Now, my next step over here, so this is going to be a credit for 215,250. Last step always, what do I need to do to balance this out in order to figure out what is going to be my bad debt expense? My bad debt expense is going to be a debit to bad debt expense and a credit to the allowance account. So here I'm going to say, well, 101,250 plus Y plus 7,000 minus 40,000 is equal to 215,250. Okay, so what's another way we could write this? Okay, 101,250 plus 7,000 minus 40,000 is 68,250. So Y plus 68,250 equals 215,250. Okay, so if I take 215,250 minus 68,250, I'm going to get 147,000. Let's make sure that it works. Okay, so if I take 101,250 plus 147 plus 7,000 minus 40,000, that's going to give me 215,250. So I know I've done this correctly. So let's come over here. So my bad debt expense is going to be 147 because I'm going to credit the allowance for doubtful accounts, and then I'm going to debit bad debt expense for the 147,000. Okay, so over here, and that's how we do a multi-period accounts receivable question. Could I make this question harder? Sure, I could add on another year. If I added on another year, what would happen? Well, I might be collecting more of the JI receivable, and I might be collecting some of the Commodore's receivable. But again, it just depends on what's happening for that particular question. But for this type of multi-year period question, just make sure you use the T accounts. Make sure that your ending balances become your beginning balances for the next period. And I want to thank you for joining me here today on this is the final video on this sequence. And if you have any questions below, feel free to like them. Please feel free to leave them below. Appreciate you liking and subscribing to the videos. And I look forward to seeing you on the next video. Have a great day.